Welcome to episode 2 of the Price Forbes Podcast, where risk gets real and markets get unpacked. Nothing that you'll hear today is insurance advice or financial advice. It's just personal opinions of each of our guests. And today I'm delighted to welcome Sarah Haller, Deputy CEO of Price Forbes, and Cosmo Warner, Director of War, Terrorism and Political Violence. So guys, today we're going to do something slightly different. We're going to be unpacking the insurance market, but bringing it to life with your lived experiences in times where there are crises, such as 9/11. We'll go through the global financial crisis, the pandemic, and we will go into the Russia and Ukraine war. And I'd love you guys to just share with us your insights, where you were and how that impacted your careers to date. Sarah, can we start with yourself, please? Where were you and what do you remember most about 9/11 at the time?
Well, I think 9/11 was the first unprecedented event of its type, and not just the monetary loss that the insurance industry faced, but for me, it was a loss of life. I mean, we lost, I think, around 3,000 people, 500 insurance colleagues, many of which were friends, and everybody knows where they were at the time, how they felt, and yeah, it almost didn't feel real at the time. I was actually in Gloucester visiting a client, and I remember watching the second plane attack, and just it didn't seem real. And yeah, it was unbelievable, really.
Cosmo, were you born?
I was going to say, not a remotely laughing topic, but yeah, I feel quite fraudulent speaking about this one because, as you said, I was nowhere near the insurance market at the time. I was actually probably I think I was on my way to school. I do remember it very clearly. I think I was still studying about Rasputin at the time. No, my old man was traveling in the States at the time. And I remember very clearly thinking, obviously, young me didn't understand any of the implications that it would have on the insurance market. But obviously, as a youngster at the time, you just knew it was this one massive, major event that was going to have quite major knock-on effects. So, as I said, can't speak about it from an insurance perspective, but you hear all the fallouts from what happened, certainly within my market, the political violence market. I mean, it was really the making of my market. The PV world came to light, the terror sector came to light, really on the back of 9/11, and it really it brought a huge amount of maturity, I guess, also to that marketplace. I mean, not only just from the private market perspective, terror-wise, but also you saw the inception of the TRIA terrorism pool in the US, Pool Re in the UK. So, personal lived experiences, I was well beyond my career, or before my career started. But certainly the actual, the incident itself had a massive impact in where I am now and how it's kind of come about.
I mean, it definitely changed insurance. I mean, contract certainty was born. There was a huge dispute around whether it was one or two incidents. Obviously, it ended up being two events, which meant two deductibles, which was a challenge for lots of clients. And I think it was about 60 billion loss to the insurance market. It's huge. And 20 years later, we're still talking about it. And yeah.
I think it was also just from what I understood of it at the time and looking back on it. I mean, we've seen recent events. You've got, of course, the Russia-Ukraine war and what's going on now in the Middle East. But 9/11 itself, at the time, I think the CAT modelling and the CAT perspective was very much focused around natural hazards and, hurricanes, tornadoes, all those nat CAT exposure. But 9/11 was a whole new type of catastrophe risk that came into the market, and not just the impact of kind of a one-off loss into one area, but I think it was the
multi-line.
It was the systemic issues that then posed on all classes of business. And not only was insurance world, it was a very robust sector. Lloyd's was very much well established. It kind of brought out the cracks in other areas and where risk modelling actually was a bit short. And so the market had to mature very rapidly, from what I understand.
And how we travel, changed dramatically.
Yeah, absolutely.
Like I was on one of the first flights out after 9/11, and you had a plastic bag with your passport in. It was insane. And you can see it, security at the airports now is all because of what happened.
Yeah, and then obviously the event was so much further reaching than just the insurance market.
Oh, absolutely.
And outside of the policy conditions and the way in which insurance was shaped as a result of 9/11. Sarah, would you give us an insight as to the leadership at the time? Were leaders prepared? Were the market ready for something like this? I imagine in a critical moment, people were panicking in terms of not only their clients, contracts, their staff. It must have been a very unnerving process for leaders.
Yeah, absolutely. I mean, I worked for a company where there was significant loss of staff. So that was, as you can imagine, really, really difficult. But yeah, I mean, good leaders shine in the times of a crisis. And, I think that's in any crisis. But yes, and how you were talking to clients, we'd never seen anything like that before. As Cosmo said, the accumulation aspect was not really thought about before. Yeah, I mean, I think that I was very fortunate enough to work for a company where we had really good leadership and communication, and actually it's probably the first alert I'd ever received on a mobile phone to make sure they knew where you were, which was never really had happened before. So that was pretty cutting edge at the time.
I'm keen to understand, given it was a completely freakish event and completely unforeseen, how quickly did pricing and capacity shift in that very moment?
Well, cover wasn't like withdrawn immediately like you see sometimes now with like war and terror. But I think renewals become very problematic because the capacity obviously significantly reduced just due to the huge losses. So, how you were dealing with clients and what was available did change. But I don't recall it changing as a sudden knee jerk, but it was certainly, if you just had your renewal, your next renewal was going to be very, very difficult. So it was depending on where you were in the cycle. But absolutely, the market capacity significantly reduced. And that did happen quite quickly.
When you talk about capacity shifting and pricing adjustments, Sarah, perhaps segueing into the financial crisis, which was another major event, which was for some a bit more foreseen than something as tragic as 9/11. How did the capacity and pricing shifting in 2008 compare to what we saw in 2001 in the 9/11 tragedy?
So the financial crisis in 2008 was very interesting because you saw the collapse of Lehman Brothers, huge investment bank, and AIG, which had insured a load of toxic assets, and they had to be bailed out by the US government. The Bank of England stepped in. We hadn't seen anything like that for some time. I think that was probably the biggest crisis since World War II in terms of financial. And the insurance market, with the disruption of a huge company like AIG, impacted clients. It really did. And you did suddenly see clients were under significant pressure with their renewals. They couldn't get the coverage they really needed at the right price, and how you communicated with them and not necessarily always having the answers was really important.
And Cosmo, what about your experience? This is something that your career had started. You were very much in the market in 2008. Again, give the audience a sense of perhaps some of the panic or the disciplines that were being shown during that period. I imagine your clients were quite concerned about what was going on with the likes of AIG.
No, I mean, the knock-on effect, you saw it even, I think, we might touch on COVID, I think, in due course, but, the results into my world in the political violence space, although it's not an immediate, PV exposure, I mentioned the systemic knock-on effect of these, of 9/11, of the financial crisis, it's more the sort of socio-economic effect it has, on sovereign stability and all these other territories where, that were relying, I guess, against the US dollar, which had, completely collapsed at the time. And that impact in these, in foreign areas, and the need and the risk of kind of civil disruption, people and, the cost of living and desperation, I guess, that immediately had an immediate kind of implication into my world, the PV space, recognition of need of a product, of that risk, escalating. So absolutely, I mean, it's not an immediate geopolitical peril or concern, but that systemic issue that it has in the social kind of areas and in wider regions is absolutely had an impact in my world.
I'm keen to understand, Sarah, certainly as your role, Deputy CEO of Price Forbes, the systemic risk and failures that we saw during the financial crisis were really to do with leadership, greed, chasing returns. How have those moments of crisis shaped your decision-making when running a business?
Well, we're far more regulated now, thankfully, than we were in those days. And I think that, leadership has changed because, we need to be more balanced in decision-making. I think we're more aware of the impact it has on business and others, I'm pleased to say. And I think largely some of these decisions in the past were greed. If you look at, the subprime crisis, what took down fundamentally AIG at the time, who, you know, they were actually deemed too big to fail, right? So look at that. They changed their name to Chartis for like 12 months. No one's probably remembers them being called Chartis. You know, it's interesting. And they reverted back to AIG. And, you know, thankfully we're in a different, you know, time.
Some might say,
great tune,
thank you, that we are approaching a 2026, perhaps 2027 financial crisis. Are clients more sophisticated? Are they asking more questions about the quality of the insurers? And do you see parallels to what we experienced in 2008?
So clients are definitely more sophisticated today. You have more professional risk managers. There's more insurance qualifications that most people take really seriously. I mean, we certainly encourage our entry-level people to do their qualifications. And I think the rating of the insurers is important to some clients. I say some clients because probably not everyone, but I think that, you know, the really big multinational clients, complex clients, yes, it does absolutely make a difference on who their paper is with.
And what about yourself, Cosmo? What are you seeing in that?
100%. I mean, in our space, the value of the product is like never before has it been proven so much. I mean, we talked about 9/11 earlier, but ironically, that wasn't actually in our market. I mentioned at the time that was kind of the birthing of our market. Our market really first got properly tested actually from, well, I guess, you know, Ukraine, Russia was a major one. But then, you know, we had the riots in South Africa, we had Chilean protests, we had Hong Kong protests, we had umbrella incidents in Bangkok. South Africa, I think I've just mentioned. You know, there have been a number of events now that have happened which have really tested the product. And each time, you know, Lloyd's has come to the table, claims have been paid, and clients are really starting to understand the value of what we do. To Sarah's point about the rating of insurers, I mean, we find, you know, a lot of our regional clients across Africa sometimes will be more than happy. The price is one thing, and they don't really mind what security is. At that point, we step away. We say, you know, if price is all it is and the premium is all that matters, are they going to pay a claim? Ball's in your court, go for it, and happy for you to take it. We would, as a team, you know, we would never put forward to a client anything that is below an appropriate rating for the risk that we think that they're signing up to. So absolutely. I mean, we will only ever work with credible, proper A-rated insurers and or trading partners that we think are going to be paying the claims, because if they can't pay the claims, then our reputation's at stake and the clients aren't getting what they deserve. So it's a pretty simple yes.
I'm picking up on that point. Please. Sorry, Drew. How the policy responds is so important. And I think clients are much more aware now around event scenario planning, making sure their coverage actually does respond. Whereas I think previously, as long as they had that, I've got cover, it probably was different. So I think some of these like crisis and events have really changed how people buy insurance.
And I think this is so cliche and a bit of corporate jargon, but, you know, the insurance product in proper insurers and proper companies that we work with genuinely want to pay claims. You know, it's the only way that they prove their value and they prove their worth. So provided we're working with the right partners, which at Price Forbes we do, then absolutely we'll always prioritize security and financial comfort for our clients over price.
Love that. And as brokers, it's our job to find solutions to problems for clients. And I don't think that discipline has changed.
No.
Final point before we move on from both of you, can be a one-word answer if
Go
needed.
for it.
Do you think underwriting discipline is where it needs to be?
Sarah?
No.
No.
Moving on to a subject which, again, is close to a lot of people's hearts. This particular crisis we'll discuss was far more wide-reaching than simply the insurance market. I am very aware that this is quite a sensitive subject, but Cosmo, I'd like to start with you. The pandemic, COVID, not that long ago, albeit time is rapidly passing by. Just want your thought. Where were you at the time? What was your take on it? And then we'll move into what happened in the insurance market.
Sarah, you'd be delighted to know that I was in the market at this point.
Thank God.
So I had grown up.
Eventually.
So COVID, geez, mad. I wasn't with Price Forbes at the time. I was a different broker. And it was so surreal. I remember us just kind of being in the office and, you know, you're kind of your average Monday to Friday getting in, but you were reading BBC News and you were reading these updates about, you know, potential viruses or something coming out of a lab in Wuhan and concerns. And, you know, the journos were obviously all over it. And it started off in week one and then it kind of developed and news got bigger and bigger. And then all of a sudden, it kind of got into the office that we were potentially all being sent home the following day and that the government were having chats to lock down. And it all kind of at the time was I don't know, it was just kind of completely unprecedented. Monday to Friday in the office was an absolute non-negotiable.
Yeah.
And suddenly you're being sent home to work from home and you're thinking, well, how the hell am I going to do that? Like, I've got a laptop, but I haven't got an office space. I live in a little flat. Haven't got the space for it. But you did. I think, again, it was kind of, certainly from my career to date, it was absolutely a complete making of the market, even in my short career period. Over the last 10 years that I've been in the market, it's completely changed the way in which we operate. The automation of a load of product offerings, the ability to work quite literally remotely wherever, and the kind of that global connectivity has become more and more seamless, and actually I think has enhanced us as brokers that more than it was before. So I mean, yeah, in answer to your question, it was very surreal from a human perspective. It was just bizarre. I think we just got sent home early, and that was great.
You thought you had a few weeks off, didn't you?
Yeah, exactly. But
Sarah, what about yourself? What were the takeaways, the lasting memories that you had from that particular moment when the government announced that we'd be going home? We were all at different brokerages at the time. Were we ready as a marketplace?
Well, interestingly, we were more ready than perhaps we thought we were.
Yeah.
Because I'd never ever worked from home until COVID, and I have been around a long time, as you know. So, and actually, I was also in somewhat denial because I think I would be back in a couple of weeks, and I was even debating whether to take my laptop home because I've got a computer at home. So, I mean, it's ridiculous when I say that out loud now, but that's where my mindset was. And we had been operating, which never got implemented because we just got locked down, but like a red and blue team system. So, we were going to do 50-50. In the office. So I think from a leadership perspective, I was really pleased around how people stepped up and responded, and that will be different experiences for different people. But perhaps my own personal experience was the fact that, I hosted a team meeting every day, and we people really looked out for one another. We tried to make things fun, so we'd have quiz nights, and I'd never heard of Zoom before we went into lockdown, and now
Zoom was your best friend all of a sudden.
And
what happened to Blue Jeans?
Blue Jeans. God, I remember working at Blue Jeans.
They didn't do so well out of the pandemic.
No.
But in many respects, do you think that COVID actually brought everybody closer together within business, even though actually in terms of physical distance, we were clearly very far apart?
From my perspective, it was in a strange way, yes. I think you made, as Sarah mentioned, you made the extra effort to book in meetings every morning or every, certainly mid-morning or afternoon. You check in with the rest of your guys to make sure everyone was kind of okay, and you had to be communicative. If you weren't sat opposite each other at a desk, you had to find the means of doing it. So yes, you can't replace, again, this is cliche, but you literally can't replace human contact. It's so valuable, and that will always stay within the insurance market.
So in terms of how that impacted our clients, I did a previous recording with a number of Price Forbes colleagues and asked them a very simple question: face-to-face or Teams? And overwhelmingly, it was face-to-face. So just pivoting a second, but still within COVID, just to round this off, give me a sense of what your markets did at the time. I worked in financial lines at the time. Cosmo, I'd be keen to get an understanding from the PVT market. I felt that this particular crisis moment shifted market appetite and capacity instantaneous. And I'd be keen to just get your take on what happened in the marketplace, and if there's a particular story you'd like to share with us about bringing to life the challenges you as a team felt in that moment.
Yes, it shifted rapidly. Our market, did it withdraw capacity in any kind of way? No, not necessarily, but it absolutely, you talked about underwriter discipline when you asked us earlier. It had to be aware of it. So, the heightened risk exposure in those other territories, in the UK as well, was certainly something that underwriters had to take into account. Perception of the potential fallout was very, very, very scrutinized, but immediate knock-on effect from COVID itself. We absolutely saw claims come into our sector that were completely unrelated to what our conventional kind of product offering was, but it was people trying to sneak through. Was it potentially, was it actually an act of war? Had this virus been manipulated in a lab in China, and therefore had it been launched into the world as a means of an act of terror, war, whatever you want to describe it? So we had clients who were trying to come into our market to claim on our policies as an act of war. They were declined. But it was really interesting to see that approach from clients and the use of the product and whether or not they could claim under it. There might have been a couple of ex gratia payments that were paid out because, of course, that's where the insurance comes to the
Are we
table.
going to give those carriers a shout out? No.
Not to mention right now. So there were instances where I guess maybe they were settled. But I think from a broking perspective, I mean, just to it was so important that we should have understood the product at the time anyway, but anyone who had the slightest, had a client query or whatever, it was all about transparency. Clients just needed to know in a very rapidly moving kind of, risk landscape, they had to understand what their products were going to pay out for and what was going to come, whether that was a no, it's not going to pay, or yes, it's going to pay. Give them a genuine answer and don't overpromise. Don't go outreaching to them and saying, far-reaching, saying, we can get this, that done for you. Because at the time, the market was adjusting. It wasn't just in my world. I knew that other lines were trying to understand what was going on. So I think from a broking perspective, it was just understand clarity of your immediate product and communicate with your clients. And as Sarah said, communication with clients at the time, working from home, it was about getting on the front foot, reaching out to them, letting them know that you were there, and that you were absolutely, that you're
by their side. I mean, trying to help them through it because, as you mentioned earlier, Drew, it's about trying to find the solutions. We didn't always have the answers, but I think that if you could demonstrate that you're actually working with them to try and obtain the relevant information to try and get the solution or the claims paid, but I remember one specific meeting I had where an insurer gave their update in a renewal meeting to the client and basically said how amazing their results had been, which to me was incredibly tone deaf given the climate. And I can remember afterwards I said that I thought that was very, very poor. And they took it on board, and they did actually phone the client up and said, I'm very sorry about that. And but it was a really interesting dynamic at that time.
We've unpacked a global financial crisis. We've talked about a global pandemic. Some of those things we perhaps saw coming more than others. A particular area where things had been bubbling for a long time, and we have a number of these across the globe at the moment as perhaps the world becomes a bit more divided, is geopolitical unrest. This is actually something for a lot of the listeners, everybody at Price Forbes in particular, will be able to understand, because this has only happened a few years back. This will have had an enormous impact, I would imagine, Cosmo, in your product lines. But the Russia-Ukraine war, can you just bring to life a little bit how your markets responded to that particular incident, and whether you're seeing any different trends or behaviours as a result of this compared to the prior 3 crisis moments we talked about?
Yes, I mean the Russia-Ukraine conflict was like the real big daddy in our kind of market. I mean, having said that, the Middle Eastern conflict at the moment is expected to have bigger losses, but in terms of immediate kind of like shock impact to the market, Russia-Ukraine was huge. And I mean, your question about pricing capacity, the market did kind of shut up shop in Ukraine for pretty immediately, just whilst they kind of managed their rags and had a good look at it. Losses and notifications are coming in from across the board. It wasn't just those immediate property damage losses, though, to be honest, that were the most concerning. It was actually, again, to use the word systemic, but it was that contingent BI aspect as well. I mean, the insurance market and the risk environment is so interconnected across all sectors, and that contingent business interruption was the major concern. I mean, Russia-Ukraine at the time brought to light losses coming from Norway that were tire manufacturers that were benefiting from certain materials that were coming out of Ukraine at the time, or you had there were, of course, the grain production out of Ukraine was enormous. So the knock-on effect that had into other regions as well, and claims coming from other more benign territories that weren't immediately impacted from the losses. So we saw losses coming from all different parts of the world, and the market had to adjust immediately. I mean, Lloyd's, I remember, it was almost a call to arms. Right. Lloyd's summoned all of their lead underwriters of all the syndicates and all their political violence markets and said, guys, get around this table, we're going to have a sort of COBRA meeting. And there was a unified agreement that it was, look, we have to push for rate across the board in all of these, because otherwise we're gonna be kaput by the end of it in a couple of months' time. So there was a real concern that Russia-Ukraine was gonna, it had a massive impact on the market, but a real concern that it was gonna have a complete do a complete demolition job on that PV world. So
who'd be an underwriter? How are underwriters underwriting, certainly with
Yeah.
discipline or risk selection in such a fragmented world, it feels almost impossible to do at the moment.
Yeah, I mean, Drew, it's a golden question. I mean, talk about underwriting discipline. They just have, it's managing your book, right? So the insurance market, and certainly, the insurance market full stop, but the political violence market is absolutely a global portfolio. Everyone has risk across, totally wide-ranging. So the impact of in one area of Ukraine will have a knock-on effect for even a benign, asset type in, a much more benign territory. I won't name any. It's adjusting. It's make sure that you're hedging correctly in certain areas that you think the risk is more alleviated, but also pushing for rate across the board if you need to make sure you're adjusting, pulling back on line sizes, making sure you're getting ahead of your conversations with your reinsurers to ensure that your treaties are in good positions, to ensure that your net line is managed, and it's just underwriter discipline. It really is. I mentioned earlier, do I think there's enough of it? No, I think some of them can be a bit, no names mentioned, but sometimes it can be a bit skew-if, but certainly the market is, it has done very, very well. And for what is a very young marketplace, it's had to grow up very quickly. That underwriter discipline has improved enormously. I think certainly just kind of making sure that you're managing your global book and ensuring that you're getting rate adequacy across the board to manage those losses is incredibly important. And just final thing, Lloyd's isn't there, and the insurance market isn't there to step away. It might have paused in Ukraine at the time, but the Middle East now is a prime example where we haven't pulled back capacity completely. Capacity is still being deployed, and insurers are there to help businesses get through these periods of conflict and concern. So underwriters are there to make sure they adjust, but make sure they're also deploying and assisting clients and that they stick with clients throughout these issues as well. So
can I ask you both for your opinion on this? I actually had a client meeting yesterday which has brought this to life for me, which is the client couldn't understand, with all of the crisis moments around the globe at the moment, maybe they're not hitting the UK directly as much as some of the other incidents we talked about yet. But they couldn't understand how in such a fragmented, uncertain world, there was such an overabundance of capacity continuing to come into our marketplace. Could you just give me a flavour of how we might explain that phenomenon almost to clients? It's a challenged one where they're getting great results, so they're not too bothered. But at the same time, they can't quite get their head around how there's not a bigger impact negatively in the insurance market. Give me your take on that.
Truth is that insurers will see, so where there's, certainly in our world, where there are losses and where there is, there are claims, etc., there is also, there's also opportunity for insurance companies to put their foot forward and say, look, we are here to support. There's one side commercially, which is that perceived rating environment, that area might be a good area for them to be going into, but also for them from a reputational perspective to be seen going into certain regions and supporting clients is also very important. I mean, you mentioned that they don't understand why there's not a bigger fallout, but there certainly are. I mean, behind the scenes, there are syndicates and there are companies that close their books because they've been loss making or they've been just completely wiped out. So there is, exits of certain carriers, but certainly new carriers come in for reasons of, conflict creates opportunity at the same time.
Before I pass the baton to Sarah on that one, biggest loss in your marketplace at the moment for the audience?
Biggest, we're looking at sort of 700 to 800 million individual for an individual client, a singular loss. So
it's a big loss.
That's a big loss.
And then if you look at Middle East at the moment, we're looking between $3.5 to $4 billion worth of losses out of the Middle East.
And Sarah, actually, Cosmo just touched on a really interesting point, which is aside from the Russia-Ukraine war, we have, as I mentioned, a number of issues around the world at the moment, in particular in the Middle East. And I know that's something as a business you've been actively involved in supporting our staff and shaping our business and strategic decisions. Would you mind giving a sense on how this particular incident has shaped the last few months of what you're doing as our Deputy CEO?
I was watching the news on that Saturday morning and then suddenly realised that this was actually incredibly serious, and personally located all of our individuals, contacted our travel agent to make sure I could get a list of people who were due to be flying out. And I personally got together a task force. We have an emergency crisis response team, and spent my whole day literally doing it myself until we could get on a call in the evening. But I think that visibility of knowing where your people are and if they're safe, and not just our people but also their families, become quite challenging at that moment. So as a business, we've done loads of really good things around how we communicate, but in terms of all of our crisis testing, having visas ready for people who are based in the Middle East to be able to get them to alternative countries to move them out. We made sure that everyone was able to get home to their families or somewhere else so they were safe, even just for respite, which was really important for their well-being. And then overlay that with people who then have pets. You have to factor that in because no one's going to leave their animals. No. So there's a whole load of complexities involved. At the same time, you're still trying to talk to your clients. You want to make sure people are safe. We got quite a lot of young people in the Middle East, and so making sure that they feel supported as well. It's a challenge, but I think that these type of events do make us look at how we trade differently. And, I was talking to our leader of our Dubai office the other day, and they were having their first sort of like team meeting on a Friday, get together, and they were really looking forward to it. And it did remind me somewhat of COVID, that first
reuniting.
Absolutely.
Yeah.
And it was really important.
Big shout out to the bravery and the resilience of our colleagues in the Middle East.
Yeah. They've been amazing. They really have. Yeah.
Fantastic. And that leads me to a question which is a little more rounded around all of these subjects, crisis, and what that means for us as a broking firm and how we engage with our clients, and quite frankly, the opportunity that may or may not present for us. Is there opportunity in a moment of crisis to shine amongst our competition and to do good things for our clients?
Absolutely.
Yeah, 100%. The placement is one thing. Anyone can place a policy into the London market. I think it's where your advisory and your consultancy side kind of comes to the table. It's actually, going out and getting a price and speaking to the market is one thing, but stepping forward, developing new products, understanding the coverage properly. You'd be mind blown the amount of brokers who are out there who are kind of getting policies placed, this, that, and the other, but at the time of a claim, don't actually understand the technicalities as to how it actually responds. So, yeah, Drew, 100%. Crisis is the buzzword of the day, but it's absolutely in the time of crisis, patience. Being composed, getting out ahead of it as well with your clients, communication, technical nous, and yes, also at the time when the market is reeling and capacity is being withdrawn and pricing is climbing, that ability and those market relationships and your kind of reputational positioning as well with the market is going to be incredibly important to make sure that you are able to still get the best results to your clients, pay the claims, get the claims paid, and also give clients that peace of mind, that sleep easy knowledge that they've got someone who's looking after them and kind of holding their hand during a time when they don't know what's going around the corner. So transparency and being forthcoming with them as well is absolutely.
And clients are long memoried.
Absolutely.
They remember who helps them and who doesn't, and that goes for their brokers and their partner markets. So it's really important that you are seen to be supporting your clients through the difficult times as well as the good times.
It's the human aspects rather than the actual corporate side.
Absolutely right. There's a bit of humility, bit of common sense, bit of back to basics. Exactly. But it feels as though a lot of our competition at times get that incredibly miscued or wrong. Yeah,
peel back the corporate side and just see what do they need. They are, I think they're trying to operate a business, but equally, it's just human values, getting towards them, communicating, and just gaining trust. Businesses operate best through trust, and if you're there through transparency and communication, then you're going to earn that trust, and hopefully that will stick with clients for many years to come.
So, guys, just to finish, a question that we're going to ask everybody at the end of each episode is: what is the most disruptive risk that you've taken in your career to date that's led to you both holding the positions that you do now?
Many years ago, we won what became our biggest client, and I changed my current job to take that client on from a client leadership role, which was a huge risk because I had, a great job, but it was at the client's request, and but it literally made my career.
So I've worked with you at another broking firm, which is where that client was held, and I know how demanding that client was. What was the shift in the role, if you don't mind me asking? So
I went from managing pretty much like projects and hugely busy role. I loved it because it gave me access to markets, clients, new business. But this role was very, very specific around day-to-day client management, huge account all around the world, and highly demanding, incredibly technical. And it was new to me, but it was such a risk to do that because I'd actually stepping away from my team who I'd handpicked and built, and it was going really well. So, that was a risk, but a good one. And like I say, it literally shaped my career, and it gave me completely different experiences, and I learned so much. So whilst it was quite scary at the time and daunting, and, it was the best thing I've done.
Changing your job role for a client.
At their request.
That's client-centric.
We do anything for a client.
That is client-centric. Beat that, Cosmo.
I'll make mine, I don't know. Probably, well, if I'm honest, actually, going into insurance in the first place, again, literally the biggest cliche in the market is you don't go into insurance, you kind of fall into it.
Particularly in the financial crisis.
Yeah, exactly.
Very brave.
And truth be told, at the time I was looking at all sorts of different avenues elsewhere coming out of university, but I had this offer from a broker, really good broking house that I'd done a couple of internships with them through my uni days and loved it. And they said, do you fancy coming on board? And my old man was like, Cos, just get going. And, what will be, you can apply for other jobs from there, but just get yourself into an industry. So I did it, and to be honest, loved it. So that was one. I know you've asked for only one, but the second one, to be honest, was all financial lines. So your old shop was in financial lines for a number of years, and then I moved into the PV world, and it was a risk at the time because and I remember being feeling because the political violence is, under no illusions, is a totally luxury product. It's not the big ticket property world, the marine world, the big premium items, which are the biggest market players. But in my head, two things. I mentioned the kind of this overseas experience I'd had when I was younger and going through all of these kind of areas of conflict, as it were, at the time. But it felt very tangible to me. It felt very real. And also from my perspective as well, the world was just getting more and more hostile. You started seeing more and more claims. I was running with a couple of policies when I was doing financial lines, which were just incidental terror policies at the time, just thinking, this is quite interesting. And I took the jump thinking, I feel like this is an area that I'm going to be interested in. It takes me to all parts of the world client-wise, and it does. So, there's heaps of travel to all of these quirky, cool client bases.
That you'd never go to if you weren't.
That you would never go to otherwise in other areas. And for me, that gives me a total kick at the job that I do. I love working with all of these random places of, whether it's people in Burkina Faso, Cameroon, Thailand, Singapore, wherever it might be. It's so far-reaching, and it all ties back to London at the end of the day. So it's, you get a great benefit out of speaking to all sorts of different people, different clients in really, really interesting regions and where the product is absolutely, needed. And for me, it was kind of that risk of going into a slightly smaller market, a nice to have product line, which is becoming, sadly, hate to say it, but sadly becoming no longer a nice to have and more becoming an absolute mandate on people's balance sheets. So yeah, there you go. So I'd say probably diving into the PV world and God help us, the insurance world initially.
What was yours?
That's a great question. I didn't expect it to come back to me as the host. My decision would have been, I left a independent but large broking firm in 2005 to join a startup, high net worth backed small brokerage, which had 30 people. I didn't even know anything about financial lines at the time. I was working as an insurance technician, and it was a big jump, big leap of faith to go to a business where I didn't know the owners. I didn't know what the ambition was. I sort of followed someone who was going into that business. And actually, it was the making of my career. It put me straight in the coalface of dealing with clients. We had to build our own TOBAs, our own policies, our own procedures. It was a proper knife and fork, build a business. And actually, compared to my peers at the time, it was the complete antithesis of how they built their career. They were going to AIG, to Marsh, to Aon.
Yeah.
And I went to this small startup no one had heard of and was fighting for every single client we could get our hands on. And then we eventually sold that business to Gallagher's. And it was a really lovely 5-year period building something from scratch. So that would be mine.
Yeah, good.
Very good.
I just want to say a huge thank you to our guests on the Price Forbes podcast today. Sarah, thank you so much for your time. I know you're a busy lady, and I really appreciate the input that you've given. Cosmo, thank you also. I know you're incredibly busy, clearly in a demanding product class, and your insight's been invaluable. So thank you so much for that.
Thanks, Drew.
I'm Drew Harvey. Thank you for listening. We'll see you on the next podcast.